once you get the retail into these sort of highly leveraged option strategies, the volatility obviously spikes up, because what do? You buy out of the money, call and put a lotto tickets, right? And that forces dealers to gamma hedge these things, especially if they're very short dated. And so if we get like 0-day Bitcoin options trading, where you can essentially have like, 100x plus gearing on your position, you're going to start to see some wacky moves in the price. We are entering this phase of inflation and populism. This bull market is just getting started, and I don't think people have the right imagination about how ridiculous it can get. So yes, $1 million is my price target.
Bitcoin experienced a significant correction on Tuesday, as US-listed spot exchange-traded funds saw decreased interest from investors. The primary cryptocurrency by market value dropped by over 8% to dip below $62,000, according to data from TradingView. This marks the largest single-day percentage decline since November 9, 2022, when prices plummeted by over 14% due to the bankruptcy of the FTX exchange, formerly the third largest in the market. Bitcoin has retreated by 15% from its recent record highs, reaching over $73,500 just last week. Over the same period, the CoinDesk 20 index has also pulled back by 16%. Despite this news, the co-founder of BitMEX, Arthur Hayes, maintains a strong bullish sentiment on Bitcoin's future outlook. He even predicts that Bitcoin could eventually reach a staggering price of $1 million per coin. In his latest interview, Arthur Hayes explores Bitcoin's latest rapid price surge and explains why he believes it's a recurring phenomenon. He attributes the surge to the accessibility provided by Bitcoin ETFs, making it simpler for more people to invest in the cryptocurrency. This accessibility, he argues, propelled Bitcoin's swift ascent to new all-time highs. Hayes also links Bitcoin's rise to broader economic and political patterns, citing global government debt and elections. He proposes that governments might resort to printing money and offering benefits to secure support, creating an environment of inflation and populism. Stay tuned until the end of the video to hear Hayes reveal the power of Bitcoin as an alternative investment amid challenges faced by banks and governments. As we show you clips from the interview, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more similar videos. We hope you enjoy it.
I think people are not, I do not think people have big enough imaginations right now. Oh, I need to like take some chips off the table. Oh, it went so fast as 70,000. Like, no, motherfucker. Like, why did it go so fast as 70,000? Because a bunch of people now can like check a box and buy some Bitcoin ETF. Like, there's this whole government issue of like too much debt. There's elections around the world, and what's the message? I'm going to print money and give you stuff. Rotor, supporter, whatever. Please support me, right? That's happening. People understand it. It's visceral. We are entering this phase of inflation and populism. This bull market is just getting started, and I don't think people have the right imagination about how ridiculous it can get. So yes, $1 million is my price target. It's hit a nerve. The timing is right. Everybody's freaking out about these massive, well, not everybody, certain investors are freaking out about these massive deficits. There's this inflation issue ever since COVID. There's a general mistrust of the government after they lied to us about vaccines and all sorts of other things, right? And then you have contentious presidential elections around the world. People want something different. And I think this taps into sort of that narrative. And then you have, the entire TradFi financial press pushing this narrative of, yes, Bitcoin's a good inflation hedge. Guess what? Here, buy this product over here, pay these guys some money to manage it for you, right? So now all the interests are aligned, and now you have CNBC every day spitting out messages that you and I and others have been talking about for decades, right? So it's just that incentives are aligned, and so it can continue as long as the narrative holds. Like, once you get the retail into these sort of highly leveraged option strategies, the volatility obviously spikes up, because what do? You buy out of the money, call and put a lotto tickets, right? And that forces dealers to gamma hedge these things, especially if they're very short dated. And so if we get like 0-day Bitcoin options trading, where you can essentially have like, 100x plus gearing on your position, you're going to start to see some wacky moves in the price. And so while, yes, a very passive, steady stream of money coming in that might be a bit sticky, might dampen volatility to some extent. But remember that once we have these derivatives on top, those ETF trading flows are going to fling up and down, and you're going to have very big traders having to hedge their positions in the spot markets and in the non sort of like TradFi type derivative markets offshore. So I think the volatility probably increases as we get more different types of people trading highly leveraged derivatives on the back of the Bitcoin ETF. Bitcoin is the sort of release valve, or the most popular one since 2009. And, it's gone up the most of any asset class ever in human history, which makes sense because the United States has printed the most money that it's ever printed in its entire history. If you move over to China, similar sort of situation. Their entire industrial policy is centered around, let's make sure that we borrow money from the people through the banking system at a lower rate than which the Chinese economy grows. So Chinese economy on a nominal basis has been growing, 5 to 20% every year since the mid 90s. But on a bank balance, you're lucky to get more than 4 to 5% as a saver. And so what happened in China? Obviously, there wasn't a Bitcoin back in the year 2000 when they joined the WTO, or even now today, it's difficult to buy Bitcoin onshore in China. They bought property. Property was the one asset where the government was encouraging the price to essentially reflect the amount of capital that's being created and the growth in the economy. And as we saw, property market zoomed in China, and obviously it's going through a bit of correction right now. But you could understand why a Chinese person, if you see the economy growing at 20% a year and you're only getting 4% in your bank account, you're going to do something else with your money. Japan, the BOJ, has probably printed the most money in nominal terms of any central bank ever. They own more than 50% of the bond market. Same deal. Nominal GDP growth is growing in Japan, but yields are negative on bank balances, and they've been holding 10-year yields at around 1 to 1.5% for the last few decades. This is an intellectual thing I've started to think about. Is I don't want to sell Bitcoin for fiat. I want to sell Bitcoin for energy. Right? Because at the end of the day, why is Bitcoin a good thing? It's because it's pure energy in a monetary form. A dollar used to be worth that when it didn't have any other competition. Now there's competition. Gold is very heavy. I have some of it, not as much as Bitcoin, but again, same issue. So if Bitcoin gets to a silly value in energy terms, then I need to sell it and I need to own something, some sort of way to have access to primary energy. Is that, ExxonMobil? Is that, buying a power plant? I don't know. I haven't really thought about it that much, but it won't be that I sell Bitcoin for dollars. I'm going to sell Bitcoin for some primary energy source, because that's what I'm trading in. That's what I'm trading. If Bitcoin's worth, 500 barrels of oil today and 10,000 tomorrow, well, at some point, this is a little ridiculous. How much oil should a monetary instrument be worth? Maybe I should just own the actual energy itself, because I've been able to get it at such a cheap price, relatively speaking. So that's kind of where my mind is at.
To Hayes, Bitcoin is more than just digital currency. He sees Bitcoin as a representation of pure energy due to the significant amount of energy required for its mining process. In this sense, Bitcoin's value is linked to the energy expended to create and maintain it. As a result, if Bitcoin's value becomes exceptionally high in terms of energy, he argues that it may be practical to own the actual energy sources themselves rather than exchanging Bitcoin for fiat currency. This approach allows for the possibility of mining more Bitcoin and gaining profits in the long term. By saying these, Arthur continues to demonstrate his optimistic outlook on Bitcoin, foreseeing its sustained growth for the long term. Let us now view more clips of Arthur Hayes as he expresses his views on the current state of the market, particularly focusing on the shift of investors away from traditional options like government bonds towards Bitcoin ETFs.
So it's the same story everywhere in the world. The question is, when are investors going to realize that holding bonds is for dumb people? And so, great, you can realize that, but then what are you going to do as an investor? Before these Bitcoin ETFs in the US, and obviously soon to come in the UK and probably China as well, there wasn't really many options. Okay, yeah, you could go buy some gold, but then you got to store it somewhere. It's a pain in the ass. You could buy some stocks by the NASDAQ. Obviously, good managers did that. By S&P, that's outperformed. But at the end of the day, you're kind of stuck in these shitty things called government bonds. Then along comes the ETF, which is finally TradFi saying, okay, well, we recognize the situation. In the past, the government leans on the banks to finance the government, and it hurts the profitability of the banks. And there was I think he's a Columbia professor Charles Collarmus, can't pronounce his fucking name, whatever. He wrote a paper last summer about fiscal dominance. And the theme of the paper was, because the deficits are so high, the federal government in the US essentially merges the Fed and the Treasury, and they lean on the banking system with their banking reserves, which is around $3 trillion right now, to provide financing to the government. Now, the problem is that banks, at least in the US, are for-profit entities, and the shareholders want to make money. So they don't like it when the government basically says, yeah, okay, you have that great business going there, but what you're really going to do is just buy our shitty bonds. And they've pushed back on this. There was a recent, proposed legislation from the Fed saying, hey, why don't the large banks provide more capital? You have to hold higher reserves. The banks did a full court press, some sort of lobbyists, and of course it was defeated. They don't have to provide more capital. They don't want to provide more capital because that hurts their profitability. So at a higher level, like, why not support a Bitcoin ETF? All of a sudden, BlackRock files a Bitcoin ETF last summer, took the Wicco clowns 10 years. They still don't have one. Larry Fink gets one in 6 months, right? And so now all the banks have a way to give these bond investors something else to buy. We know that's negative yielding. We know that the government deficits are going to continue to go higher. Taxes are not going to get raised enough to cover them. Spending is getting out of control. No presidential candidate is campaigning on, I'm going to balance the budget. Not a single one of these clowns are. So it's not going to change. People are starting to realize this. And now they've got a product, at least for a TradFi, fund manager, they can allocate to a Bitcoin ETF. They don't have to change their prospectus. They don't have to worry about custody. They don't have to worry about any of the things that make Bitcoin special, other than the fact that they did the back test and it was negatively correlated to certain things they care about, and it's performed well as rates have been negative. So I think that's the macro backdrop, and that's why I think these flows are going to continue as the global investor class realizes that this time, they're going to eat a massive amount of shit if they keep holding these shitty bonds. Maybe it's time to diversify. Here's an option, and it doesn't entail any career rest for them to buy a Bitcoin ETF because it's being sold by BlackRock. You don't lose your job by buying one of Larry Fink's products as a fiduciary. So I think that's sort of the macro backdrop, which is why I think people need to not take any chips off the table. It's time to even add more, because now it's a reflexive price movement. The more the price goes up, the more people hear about it. The more they look at their bond portfolio, like, well, what the fuck? I'm down 50% over 3 years. Worst bond market performance since the War of 1812 in the US. Why am I not owning this Bitcoin thing? All I got to do is click 2 buttons and buy this ETF. And all of a sudden I've, got the best performing asset in all of TradFi in my portfolio. So I think that's the sort of the backdrop, very favorable, and it's going to be a fun bull market.
Meanwhile, according to trader and economist Alex Kruger, the recent fall in Bitcoin's price can be attributed to various factors, including significant outflows from the Bitcoin ETFs. Preliminary data released by investment firm Farside indicates a net outflow of $326 million from the ETFs on Tuesday, marking the largest outflow on record. Additionally, Grayscale's ETF witnessed a record outflow of $643 million on Monday. Kruger outlined the possible reasons for the crash, ranking them as follows: excessive leverage, Ethereum's impact on the market, negative Bitcoin ETF inflows, and the speculative frenzy surrounding Solana. Additionally, the cryptocurrency market seemed excessively heated earlier this month, with long traders paying annualized funding rates of over 100% to keep their bullish perpetual futures bets open. This disproportionate accumulation of leverage on the bullish side often predicts price corrections. Do you agree with Arthur Hayes' Bitcoin price prediction and insight? Share your thoughts in the comments. If you found this video helpful, we kindly ask you to hit the like button and subscribe to our channel for more valuable insights on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.